Is it finally time to buy UnitedHealthCare? With Warren Buffett buying the stock's going up like gangbusters. Is now the time to get in? Let's jump in and take a look, right? The first thing you'll notice here is we have the 10 over the 20, price over the 50. That's what I call the outlier trend template. When you have the 10 over 20, price over 50, that is a very bullish sign. Now, why those three moving averages? The 10 EMA is a short-term moving average. The 20 EMA is an intermediate term, not turd. And the 50 EMA is the long-term / turd moving average. Because of that, that tells you that we do have a bullish crossover here. Now, before you get too excited, that doesn't mean that this is going to be gangbusters just yet. I want to show you AMD, because AMD, in the midst of this huge downtrend from a few months ago, when it was labeled as the advanced money destroyer, it had 3 candles where the 10 was over the 20, price was over the 50. That did happen, but it continued down. However, the very next time that the 10 crossed over the 20, price closed over the 50, it was at 98-ish dollars. And then it went on to go to about 175. So it pretty much doubled during that time. Here's the deal. We don't know how far these trends are going to go, right? It could be a couple bucks or it could be 100%. We do not know, but you cannot be in a big move like this until the outlier trend template lights up. How cool is that, right? And you cannot be in a big trend until the outlier trend template lights up. So could that be a start? It could be. Let's investigate it just a little bit further. Inside of outlier here, we do have a buy signal that came on, that was on Thursday, August 14th. So I've already got it lit up on here. Thursday, August 14th was the buy signal on outlier before Warren Buffett disclosed he was buying it. And it's up. How much is it up since then? Just since that point, it's up 14%. So great start to that buy signal. Now, it'll show the green overlay probably tomorrow on here, but it got really fearful. And now it's backing off on the fear and moving up towards greed. And then look at the whole industry, the whole healthcare sector has gone like gangbusters, more and more greedy. Very interesting, right? Up around 55, where it was down around 50. So a huge move up here. And then one thing you'll notice down here is the green line is the number of buy signals we have in the sector. The yellow line is the 10 EMA of the number of buy signals we have in that sector. And it's continuing to push up. And the number of uptrends in that sector is growing. The number of downtrends in the sector is shrinking. So honestly, it's got so much going for it, so much momentum going for it, that if this fits your trading plan, this honestly could be a great place to enter. It really honestly could be a great place to enter. So now let's continue on, because this is the Outlier Trading Room, and this is my style of trading using Outlier. Of course, don't listen to anything that I say, because I am just a random guy on the internet. But my style of trading is called the golden ticket trading strategy. It starts with what is the market telling us. So let's go look at the market. We want to look at the trend, the signal, and the breadth of the market. So if we go to the market on the SPY, we can see it does have the buy signal. So we are off to a good start here with a buy signal. And then if we jump into here, we'll see the 10 over the 20, price over 50, all light up right there, which means it's in a bullish uptrend. That's also why we have the green overlay, just to make it super simple for you. So a buy signal with a bullish trend. Now, market breadth, let's take a look at that, right? So this is bullish, this is bullish. What about our breadth? Breadth is interesting. We've been doing lots and lots of research, and we have a huge upgrade coming out on September 1st for Outlier 4.0. One of the things that we've been watching is the number of stocks in uptrends versus the number of stocks in downtrends. As you can see, this area right here, you can see how it's growing. You can physically see with your eyeball how it's growing, right? And then you can see physically with your eyeball how it's shrinking over here. This is the number of stocks getting uptrends. This is the number of stocks getting downtrends. We want the breadth working for us, right? So we've got the buy signals on this middle chart here. And then on the bottom chart, this shows how many uptrends or downtrends are growing or shrinking. What I see today, if we're focusing in just on today, is a contraction in uptrends and a growth in downtrends. So that is a red flag to me. Now, for me, this would actually keep me out. This would keep me out because I want to see both this moving up, the breadth moving up on the number of buy signals, and the number of uptrends growing or downtrends shrinking, or both. That's what Chris would look to see. So I'm not going to be looking to add any new trades today. However, I do have a list of 5 trades, maybe even more, that could be really useful to you that I want to go through. And then I have 7 or 8 trades on right now that we still need to make sure that we are following our plan on all of these. So let's continue on. By the way, let me introduce myself real quick. As I said, I'm a random guy on the internet. Don't listen to anything that I say. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already. So we're going to look at exits, right? We're going to look to reduce risk before adding new trades. Like I say, I'm not going to add any new trades today. It just doesn't fit my trading plan. That's okay. I still have a list of stocks that you can look at. So hang on tight for that. Now, number 1, there are no expectations on the outcome of any of the trades. No expectations on the outcome of any of these trades, right? We can't tell the market what it's going to do. We can't tell the stock what it's going to do. All we can do is have a plan to get out when one of your exit signals is hit. It can be my exit signal. It can be your exit signal. It doesn't matter. Don't set any profit targets and anchor yourself to anything. So first, a market exit. SPY closing under the 20, not going to happen today. The sector and market breadth crossovers, that's on the this tab. There we go. That's on this line right here. We don't have any bearish crossovers yet on the market, so I don't have to worry about that. And the outlier channel score, that's how we are measuring these right here, which is going to be built into outlier 4.0, which comes out later this month or the first of next month. This is what the channel scores look like. When they're lit up, that means we're getting more and more uptrends. When they're not lit up like this, that means we're not getting those more and more uptrends. Honestly, at the end of the day, we're trying to quantify what you can see with your own eyeballs. If you can see this with your own eyeballs, all we're trying to do is say, okay, you know what? I can see this is growing, or I can see this is shrinking. That is what we're trying to accomplish here. So we don't have any outlier channel scores of -1 today. So let's look at the existing trades we have on now and see where we're at, right? Dr. J says the first is just 2 weeks from today. Don't tell Mahesh. You won't be able to sleep between now and then. Don't tell Mahesh. All right, so a half an ATR from entry would be our stop loss. So let's start with VKTX. Now, I will be 100% honest with you. I rolled VKTX and I'm down on the trade, and I'm very surprised by this. I figured I would be up on the trade. So I rolled it about 85 cents ago, and I am down. What's 916 minus 872? 916 minus 872. I'm down 44 cents on the trade. I will be very honest with you. I'm very surprised by this. I don't know why. It's probably got to do with theta and vega working together. Theta meaning time decay, and vega meaning lower volatility. Combining to that, showing a small loss on the roll. Overall, net, I'm up on the trade, which is great. But just in that one area right there, it's surprisingly down. Either way, where would I look to get out here on the chart? I would be looking at the prior day's low as my trailing stop. I don't have anything else that it's running into. And the prior day's low, here's a key tip that I learned from Larry Hite, one of the market wizards, the very first billion-dollar hedge fund manager. It's that you are never allowed ever to move down your stops. So even though the yesterday's lows are lower than Wednesday's low, you are not allowed to move down your stops. So it's going to stay there. It's going to stay there. Now, tomorrow we'll push it up, it looks like. But until then, no. Let's go look at our heat map exit. So the heat map, that's the fear and greed heat map down here. Let's go look at VKTX. They were super expensive options, right? It's part of the game. All right, so buy signal 10 over 20, price over 50, and the fear and greed heat map is run up to 41.34. I put on here my heat map exit is 73, so I don't have anything to do on VKTX. VKTX stays where it is right now. Let's go to BE. BE, ooh, that's looking sharp, isn't it? Yes, sir. Right. We're going to use yesterday's low as our stop out point, and you can see we bought it on Thursday. It's had a nice move up today, about 4% up today. Close to the rolling point, not quite there yet, and that's okay. Heat map target on BE. Trav says, never move down a trailing stop, saved so much money already. Absolutely, dude. And it is human nature to be like, well, I mean, it's lower than yesterday, so I need to move it down to the yesterday, right? It's totally normal. Trav, but what we're doing here is not normal. Okay. The returns that we put up are not normal. Just stating outright that I'm going to win the US investing championship for 2026 is not a normal thing that people can do. Right. But this is like watching Michael Jordan play basketball. Right. This is like watching LeBron play basketball. This is what I do. This is why I was put on God's green earth, is to be a trader and to help you become a successful trader as well. What we're doing is not normal. So looking at BE, heat map is at 77.15. It's not there at 80 just yet, and that's okay. So I don't have a reason to close. Could you rush it and say, well, 77 is close to 80, let's go ahead and take it off? Of course you could, but then you're invalidating the rule set that you put in place if that is your plan. And that's my plan, so I'm not going to stress on it. Let's go to SGI. SGI, another beautiful, big, beautiful trend right here. I did move it up to yesterday's low as the stop out point because that makes total sense right there, right? And it's pushing up higher, not quite to our rolling point. Heat map exit of 82. Let's go to SGI. All right. So we're looking over here at 80.75, heat map target of 82. Again, if you chose to get out early, that's on you. I would choose to follow your plan wherever the plan is going to lead you, wherever that plan is going to lead you, right? Remember, there's only 4 possible outcomes: a big win, a small win, a break even, or a small loss. There's never an outcome where you have a big loss, right? Because you are position sizing correctly and you are making sure to guard your money. Remember, all stocks are bad, but every once in a while, like SGI, they act right. Let's go to SoFi. SoFi, baby, let's go. SoFi bros, right? Not quite to my rolling point. I actually put in an order to roll from the 21s to the 22.5s for $1.30 just for fun to see if I could get filled. Has not been filled yet. I don't think it's going to get filled, but I was just like, why not? Let's see if we can get filled. But again, you know, if we're following the prior day low, you see these are lower. We don't want that. Now, also one thing you'll notice is the 10 EMA is coming up right to this point right here. So for example, if tomorrow the 10 EMA was above, you know, the prior day's low, I would then follow the 10 EMA. The objective here is to find the lowest amount of risk to be your exit point. The lowest amount of risk to be your exit point. So nothing to do on SoFi. Let's double check its heat map score. SoFi. Ooh, Michael Badinsky. Let's look at USB. In fact, let me add over to my list that I wanted to cover here in a minute. USB, because someone else was asking about USB. Okay, I've got it on my list, my friend. Thanks for reminding me. Skinny Buff Guy. That's who mentions USB, and another one as well. Okay, so SoFi Fear and Greed heat map is up at 76.17. I said I get out at 81, so gonna hold it. SE. All right, SE has moved up nicely. We're moving it up to the prior day's low, which is right here at 174.14. And by the way, I put all these details in our Discord over here in the OVTLYR Trading Room. Joe has already put where I'm going to be rolling. So if you are on the Discord, you would have seen that already. But I put everything that I'm going to do ahead of time in here. Everything that I do, you're going to see hours and hours before the trading room. All right. So looking at this, there's nothing to do here. Nothing to do on SE. Let's go look over on the heat map. Mo says, how do you calculate the new stop? Well, it's not necessarily stop loss. And I'm glad you mentioned that, Mo. There's a couple differences here, right? Stop loss versus trailing stop. I'm really glad you pointed that out. So stop loss is really your very first entry point. Like, hey, you know what? If I get in and it comes back to this point, I'm out. That's my stop loss. A trailing stop is what climbs along with you. And what we're doing now by hitting the prior day's lows or the 10 EMA is running up the trailing stops. So great question. But on SGI, how do you calculate the new trailing stop for SGI? So this would just be the prior day's low right there, right? Because it would have been like down here previously. So now we're just looking at the prior day's low right there. Easy peasy. Back over to SE. We are now in the greed. We were in the fear. Now we're up in the greed at 55.02. We said we'd get out at 68. So nothing to do on SE. Continues to work, and we're just going to let it work. Let's go to Dow, Delta Airlines. I have rolled this one. Let's talk about that. Delta Airlines. Okay, so I used to own the September 5th 56s, but I now own the September 5th 57. So let's talk about rolling options. Let's talk about rolling options. I have a slide for this. This is a really, really cool thing that it's such a ninja hack, ninja trick, ninja hack, whatever you want to call it. That most people have no idea about this, right? Let's say that a stock moves one ATR in your direction, right? That's why we mark up on the charts at the beginning. Hey, has this moved one ATR in our direction? Well, I don't know. Okay. Now we have a target. If it has achieved this target, and we aren't going to say that it must achieve that, but if it does, what are we going to do at that point? Right. The great thing about rolling an option is that we can take partial profits now. So I'm taking partial profits out of Delta Airlines, right? It's going to go fund my trip to Disney World, I guess you could say, right? I took partial profits now out of Delta Airlines. I can keep the trade alive because I still own options on it. Not the same ones, but newer ones, betterer ones. And then the capital that I freed up, I could either take it out and go to Disney World, or I could put on new trades with it. I could go to new trades with it, or I could go put on new trades with it. 314 has a great question. Do you reset the heat map after rolling? No. In fact, this is still my exit on the heat map. This is still going to be my exit on the heat map. Let's go to Dow real quick. How do you explain partial profits? You have more money in your account than you used to. That's what I mean. It's actually really, really sick. You're not going to take all your profits because you still need to keep some of the trade on, but you could probably take a third, maybe half, maybe a quarter of the total profits in the trade and put them back in your account now. It's really, really cool. All right. It's up at 78.53 today. We say we get out at 80. We just rolled this, and let's talk more about it. So when I initially bought the 56s, Chris spent hang on, gotta go to my broker and then expand the last 7 days. Then I have to filter down to Delta Airlines. There we go. When I bought it, I spent $4.10 for that option. Okay. So 410. So it's currently at 570. All right, we're going to use the ask price. 570 minus 410. So I'm up $1.60. $1.60 on the 410 that I purchased it for means I'm up 39% on that option. Let's talk about this. I'm up 40% on this option. So by rolling it, I can take partial profits right away. So when I rolled from the 56 to the 57, I closed the 56 as one order, closed the 56, bought the 57, and I did so for 80 cents. So if I'm up 39% overall, I just took 80 cents, 0.8 divided by 4.1. So I took 19.5%. So basically half of the profits that I'm up, and put that back in my account right away. How cool is that? Eric says, when do you roll up and out? When I get within a week. If I'm outside of a week, I'll just keep going on the same expiration. Great question though. So stock moves one ATR in your direction. Can you roll up and out? It's either up or up and out. It's never down, right? And the big thing here is you must do it for a credit. If you put in the order and it says a debit, you've done it wrong. Cancel your order, start over. I'm telling you this for a fact. By taking a credit, remember, we paid $4.10. We paid a debit to enter the trade at $4.10. If we pay another debit, we've just added our risk. We've just added more risk. We're not taking any profits on this. In fact, we're adding more risk to the trade. But if you take it for a credit, like I said, I rolled it for 80 cents of credit. That gives me money in my account now. Okay. But if you can't do it for a credit, then don't do it. As one order, sell to close the original position, buy to open closer to the money, same number of contracts. Now, Delta Airlines doesn't have a lot of contracts to choose from, right? I mean, we're pretty limited here. It's not like it goes from like 56 to 67, right? 6-7. I don't know if you're teenagers, but that's a thing now. 6-7. I have no idea what that means, but that's a thing. So I just rolled from one strike to the next, took my 80 cents, is what it is. So this has lots of liquidity, 4,800. This one, not as much, but it has plenty, 331. I like to see at least 250. The extrinsic value is 83 cents on 495. So 83 divided by, there we go, 495 is 16% extrinsic value. So it hits the right extrinsic value percentage. It hits the right open interest that I'm looking for. And I can take money off the table right now. So sick. So sick. All right. So that's what I did. Thankfully, Joe has posted that in the Discord if you are following along. Rolled the 9556 calls up to the 57s for 80 cents in credit. Thank you, Joe, for doing that. All right. Moving on from Delta Airlines, let's go to our final one of the day, SRAD. Yesterday's low, let me move this out of the way here. Yeah, yesterday's low is right here. And that is still going to be our stop out point. The 10 EMA hasn't crossed it, slightly less than the half ATR. So it is what it is, where it's going to be. Let's go check the heat map on SRAD, and then we'll go look for some new trades. We'll go look for some new trades. All right, so looking at this, we got the buy signal, 10 over 20, price over 50. In the discretionary sector, the sector is looking good overall, and the stock has a fear and greed score of 61. I said I'd get out at 65, so don't have to get out yet. I can continue to hold. All of my trades are printing money. Every single one of these, I'm up money on. I ain't mad. I ain't mad. Are you mad? I'm not mad. I'm not mad. I love when I open my account and see all greens. That makes Chris a happy boy. All right. So we're done with looking for our existing trades, where to get out. So now let's go look at a few different sectors and a few different stocks and see if there are any that are worth putting some money into, right? All right, let's get back to it. Let's get back to it. If I have helped you out in any way, the best way that you can pay me back is just by telling everybody you know about OVTLYR. The first rule of OVTLYR, just tell everybody know. Now, what are the sectors telling us? What are the sectors telling us? What are the sectors telling us? So if we go back to market breadth and we look here, we can see the everything we'd want to know for the sectors. And thank you to VacLab. This is version 5.1. We are going to get this built into OVTLYR at some point. I've sent screenshots off to Mahesh because this is a nice iteration of what we're already showing for breadth. But there's a huge key red flag here, right? Now, I want to discuss the active scenario 1 versus active scenario 2. That was a question we had. I think it was from Mr. Toro, El Toro. Active scenario 1 and active scenario 2. These are the only times that I'll be taking trades. So first is the market equals a score of 2. A score of 2 would mean that we're getting new highs on our uptrends and less highs, in fact, more lows in our downtrends. So, right, so we're moving up on both uptrends and downtrends. That would be a score of 2. If we don't get a market of 2, do we have at least a market of greater than or equal to 1? We don't have that either, right? It's still a 0 today. And that's what this score is right here, is 0 today. So because of that, I don't see anything that I would trade. Hand to God, there's nothing that I'm going to trade today. However, there are some sectors that have some opportunities. So the communications, the discretionary, and the healthcare sectors have some potential opportunities. So I ran those sectors for you, and it came up with a lot of names, quite a lot of names. So I'm going to go through a few of these and help you out. I'm going to go through a few of these and see if there's anything on these that Chris would be interested to look at. But before we jump into those, let's look at US Bank. Let's look at US Bank. All right. So the question was, if it was below the prior day's low on entry, would you still have taken the trade? I want you in the chat to type either yes or no. Type yes or no. If it closes below the prior day's low, so let's circle on the chart what I'm looking at here. If it closes below the prior day's low, would you take it? Yes or no? Okay, very good, very good. Right, these are lots of teachable moments on here. Excellent teachable moments on here. The answer is no. Hang on. But I did because I bought a bit earlier before the close, and that happens. Skinny buff guy with the DuckTales picture, outstanding work on that. It happens, right? Sometimes we get into trades and it moves, and not always in our direction. So on the outset, no, we wouldn't want to take that trade because that's actually an exit signal. right? If we're looking, we talked about this earlier. If we're looking to use the prior day's low as a exit signal, and you get in on an exit signal, you've kind of just invalidated the plan. Now, of course, I'm not blaming you, dude, because you said, and it does happen, you got in and then it pushed down, and then it pushed down. If that happens, just run it. Run it as if you were looking at your own trade on a new basis, even though it happened to have that happen, just run it as is. So looking at this, looking at US Bank, objectively speaking, let's run this. You know what? In fact, skinny buff guy, because I love you, we'll run this as one of my own. Let me go over here and add this to my list. We're going to run this one as if it were my own for skinny buff guy. So imagine that we got in right there. Now, our half ATR stop loss would put us where? Let's calculate half an ATR. So the current ATR is 86 cents. So 0.86 divided by 2 gets you to 43 cents minus 45.93, which was the close, 45.50. I know I'm going fast. I'm sorry. 45.50. 45.50. Come on. Here we go. Okay. We can see on here, half of an ATR is well below the 10 EMA. So you always want to find the least amount of risk. Least amount of risk. Wherever that risk is at, we want the least risk. So we would be pushing this up from here to here on the 10 EMA. So 45.63 would have been your stop out point on the 10 EMA. Now, what's cool is you can actually see that 10 EMA used as support right here. The wick was like on the 10 EMA and it bounced right back up. So that's really cool as well. Let's go mark on here our +1 and +2 ATRs for our skinny buff guy. And if it's 86 cents, so 0.86, let me just clear everything. 0.86 plus 45.93, 46.79. Here, 46.79. And then one more time. It's not 92.52. I hate it when it does that. Okay. 46.79 plus 0.86, 47.65. Which will put you up in that order block right there, which would be a amazing best case scenario, wouldn't it? All right, so we're gonna follow this one for you, skinny buff guy. I appreciate you, my dude. And you know what? Sometimes that happens. Sometimes that happens. Coughs teacher's best. Let's look at ABV. I think that was another one that skinny buff guy was asking about as well. ABV looks sharp. ABV looks super duper sharp. In fact, let's go to US Bank real quick. And let's mark on the chart, skinny buff guy, where we get out. So if we got in on the buy signal here, but we actually got in the day after, the fear and greed was at 60.55. So I would give you 10 points on US Bank. Let's go back to US Bank, and I would say get out at heat map target of 70. Okay, cool. Let's go back to ABV. ABV. This one looks really sharp right here. Let's go look at outlier, and Manny is making bank on ABV. Manny mentioned this one last week. A huge, big, beautiful move right there. Nice work, Manny. Everybody pay respects to Manny in the chat. Everybody pay respects to Manny in the chat. Manny's got that buy signal moving up super duper strong. The sector's been painting money. It's been getting more and more greedy. It's up at 78 right now, and the buy signal came when it was down at 62. So it's gone up about 15 points right here. You could absolutely take money off the table at this point. That is up to you. You probably could have even rolled it a couple of times at this point. So nice work on that. Let's get back to the list that I had created, and let's start with CRISPR Therapeutics. All right. So I want to make this a educational time, right? I want to make this educational time. So as we go through these, we've got CRISPR, PVH, Amazon, CYTK, or CYTK, yeah, CYTK, GMAB, US Bank, AbbVie. We already went over those two. So CRISPR, PVH, Amazon, CYTK, and GMAB. Let's talk about why we wouldn't want to get into these trades. All right, let's talk about why. I am looking for audience participation on this. This will make things way easier. So let's start with CRISPR. I'll go into Outlier and you tell me. CRSP. All right, you tell me why we would or would not want to look at these. Why we would not want to look at these. Juan Pipo, we're going to look at CYTK. But we just looked at AbbVie. We just looked at AbbVie. All right, tell me why I wouldn't want to do this one. So Zach's off to a great start. A close below the prior day's low. Yeah, that's a huge red flag for me. And this is another reason why I like to trade at the end of the day, right? Because even if we get the buy signal in the morning, a lot is going to happen during the day. And this is a perfect example of why we want to wait till the end of the day to see what happens. Let's see. A lot of people are seeing that. A lot of people are seeing that. Very, very cool. Bobby's World says a red light. Now, Bobby's World with the new profile picture looking sharp, dude. Okay, taking a look at this, a red light would mean a close under the 10 EMA. It's so close right there, Bobby. In fact, it just went under right now. That's another great point. That would be two different exit signals for me. A close under the prior day's low and a close under the 10 EMA. Both of those are exit signals to me. This is one that Chris would definitely stay away from. You are welcome. You are welcome. All right, let's go to OVTLYR real quick. And like I say, don't take these buy signals in a vacuum. You need to do your analysis on the market, on the sector, and then the stock itself is the last thing. And here's a perfect example why you want to wait until the end of the day. Let's move on to the next one. PVH. PVH. It's not acting right. It's not acting right. All stocks are bad, but every once in a while they act right. Every once in a while they act right. SNGX is not an outlier. The stock went up hugely today. It went up huge. Don't worry, Tatus. We are adding a ton more, but we need a certain amount of data, historical data, in order to generate the buy and sell signals and the fear and greed heat map and everything. However, we are going to be adding more and more all the time, so don't be discouraged. It might happen sooner than you think. So we have a buy signal that just came through today. And on the fear and greed, it's going up. No, it's actually the same. Fear and greed is absolutely flat, 74.45 for 2 days in a row. Even though discretionary is looking pretty strong right here, fear and greed's kind of flat. Let's go look at the chart on PVH. Not so bad right here. Really not so bad. I mean, realistically speaking, if I'm looking at PVH, the thing that would have kept me out of it is the fear and greed heat map not going anywhere. It literally is to the hundredths on the decimal, the same fear and greed, right? And that's not what we want. We want to get into a stock that's getting more and more greedy. And this is a great example, right? Even though the greed was going up, price was flat for a while, and then price caught up to it. Price caught up to it. And that's what we're looking for. We want to be going as it's moving up, not as it's moving down or sideways on the fear and greed. Tactical Gamer, we already looked at UNH. That was like the first thing we started with. Let's go to Amazon. Oh, anybody got an idea on Amazon? Anybody got an idea on Amazon? Anybody got an idea on Amazon? All right, looking at this, we got a buy signal. It's getting more greedy. Discretionary is looking strong as well. Oh, outlier blocks, order blocks. Tactical Gamer just got back. Oh, you know what, dude? I got you. I got you. I even talked about you in the share your big wins, dude. You're awesome. Yeah, we got that order block right ahead. Now, as I mentioned, the one of our family friends has a high schooler that actually asked me this question by text over the weekend. And the best way that I can describe this is that this is an area where there are trapped buyers. These buyers got trapped on this candle here, Thursday, July 24th. They want to get out. This is an area of overhead resistance. If you're at new all-time highs, there are no order blocks because nobody's trapped up there, okay? This is where people are trapped, and they're saying, I want to get out of break even. I messed up. As soon as I get back to break even, I got to get out of here, okay? Now let's look at an example on AMD. Boy, did the trolls come out for AMD. These buyers got trapped in July of 2024. The very first time price came back to this level, it is struggling bigly to get through here because these buyers got hosed and they had to wait over a year to get back to break even. And the very first thing they're doing is unloading their stock as fast as they can. Might be what we're seeing here on Amazon. Might be what we're seeing on Amazon. But a visual representation that I like to think about is imagine putting your car in drive and there's a brick wall right in front of you, right? One of two things is going to happen. You're either going to crash through the brick wall, but your car is going to be damaged to all belief, or you're going to crash into the brick wall, airbags are going to go off, and you're not going anywhere, okay? Either way, it's going to be a struggle. Either way, you're probably going to take a lot of dents. And either way, that's not a trade that I'm willing to put on. Not a trade that I'm willing to put on until it pushes up higher than this. Now, some people would look at this and they'd say, what do you mean? Wait. Why would I want to pay more for the stock? That's so dumb. No, here's the deal. You want to be successful in the market, buy stocks as they're moving up. Don't buy stocks as they're crashing down. Buy stocks as they're crashing up. That's the fastest way to profitability. And right here, you're going to have a lot of resistance until it crashes up through there around 236 or so. Let's look at CYTK. Let's look at CYTK. SoFi's acting right. That's right. Did I get filled on my roll? I'm just curious. Activity. So no, it's still working at $1.20. All right. So CYTK, buy signal. Fear and greed pushing up 41.23 up to 41.59. Sector's looking really strong. CYTK inside of outlier on the outset looks pretty good. Look at this. Order block was ended right here. So those trapped buyers got out. And now we don't have anything in their way. You tell me. You tell me. Are we interested in CYTK? Honestly, of everything we've looked at right now, CYTK is probably the best. In fact, I would say is the best. And Cody says it even looks good on the options chain. Yeah, Georgia says looks good to her. I don't see anything that would get in my way here if the market breadth had cooperated. Let's go to the options chain on CYTK. Shane says, yeah, it is the best. It is the best. We're looking at September 19th. Now, you'll notice here that there's not a lot of options to choose from, and that's okay. You don't need a weekly. You don't need a weekly. What is this little unusual option volume? Ooh, that's new. We are probably causing this unusual option volumes. I'm just putting that out there. It even lights it up on the chart where that is. That's cool. This is honestly the first time I've seen this. This must be a new feature. All right. So the 35 strike on September 19th. Let's look at the extrinsic value. $1.41. $1.43 over 540. 26% extrinsic value. 30% is my drop dead. 20% is my ballpark. That would totally fit. U for outlier. I like it. So honestly, if the market breadth had been acting right, CYTK is a trade that I would be looking to put on. But for me, that's okay. It doesn't fit my trading plan. And because of that, I'm not worried about it. However, if it does fit your trading plan, like Art right here, Senior Wahoo says, it's looking good. If this does fit your trading plan, by all means, follow your plan and make sure you know exactly where your risk is at. So at this point, you're probably asking yourself, what is outlier and how does it work? Right? I hadn't even talked about what outlier is and how does it work. Old Uncle Warren used to say, be fearful when others are greedy and greedy when others are fearful. Outlier shows you if investors are acting irrationally fearful or greedy and by how much, allowing you to get the stock before the outlier move happens. Now, if you're ready to save time, make money, start winning with less risk, it's just 3 easy itty-bitty baby steps. Step 1, head over to outlier.com, grab the annual pass for just 82 cents a day. And if you want to get these live streams, access to these live streams, they are invite only starting next Monday. Next Monday, the 25th, August 25th. You will not be able to see these live streams for free anymore after August 25th. Okay, so it's just 82 cents a day. You tell me how good of a deal that is. If you're on the monthly plan, click and upgrade and save 64% off the monthly price. Step 2, start using the Outlier 9. And step 3 is sit back and relax because you just found the easiest way to save time, make money, and start winning with less risk. And JP, he wants to look at STX. JP, let's do it. Let's do it. Let's do it, JP. All right, STX. Whew, STX. By the way, this was one of the most big, beautiful trends I may have ever seen ever. I saw this a few months ago when I was putting on some trades and I was like, oh man, I totally missed such a gorgeous trade. Because I remember looking at STX. It was between STX and some others. And I went back and I'm like, frickin' look at that trend. Have you ever seen a trend more big and more beautiful than that? Oh my gosh, how nice. But STX looking really, really sharp right here. 10 over 20, price over 50. Pushing to new highs, which is great. No stuck buyers. Let's go to STX here. And this is in the tech sector. And you can see the tech sector still has bullish crossovers, less uptrends, more downtrends, though. That's not so great on breadth. The heat map, the average fear and greed score is growing, and it's looking really, really sideways on the fear and greed. Honestly, this one, it looks a little stalled out to me at this point. It looks a little stalled out, but it does have the buy signal. But you know what? If you know exactly where your risk is at, STX it does look really, really brilliant. It does look really, really brilliant. It could be either way. It could be either way. It just doesn't fit my trading plan. That's okay. It's like a reversed AMD. That's right. Oh, Ryan, thanks for reminding me of which one I chose. Yeah, really appreciate that, dude. It's a trend bigger and more beautifuler. Exactly. All right, listen, if you're ready to save time, make money, start winning with less risk, click one of these two videos and have a fantastic day. We'll talk soon.